You guys, can you guys see my screen? Or do you see my
Yeah.
presentation or do you not see my presentation?
Well, I don't see the presentation, but it shows
Yeah,
you breaking up everything on your end.
yeah.
I'm breaking up. That's not
No,
Oh,
good.
no,
bring
no, bringing it up, bringing it up. Yeah, it's coming up, I think.
Oh, okay. Let's give me a quick second and I will make.
so we can see. I suppose it's your device desktop, so we see the tabs and all of those things.
Okay, got it. So let's just go here.
Okay, yeah,
We should be good here.
right.
I think you have to put it into presentation. There you go. Yep.
You got it. All right. It's just going live on all right, very good. Well, welcome everyone. Thank you so very much for joining me today. My name is Annabelle Pacheco. I am a real estate investor and I am a broker. I've been in business for 24 years. And really the purpose of this presentation is to share with each one of you in detail the 8 steps that I took to purchase my first multifamily deal in hopes that you guys will also be able to do the same. And I want you guys to know that I'm not selling anything. I'm not offering anyone anything. I am just, or nor am I a financial advisor. I'm just sharing my story, what I did in hopes that, we all use this platform to share information that we get from other sources with each other and that we learn from each other. Now, a little background about me. I started in my career in the mortgage industry in the mid-90s, and I have purchased over 100 properties throughout my career. I rehabbed, I flipped, I leased, managed small 1 to 4 units, and so just have been involved in pretty much all aspects of the real estate end of it. In 2001, I did deviate and I built a 150 capacity restaurant from ground up, had a staff of about 15 people, which included managers, chefs, and servers. The last 10 years, I have focused my business in representing clients in residential and commercial real estate. And the really great and exciting thing for me is that and the date is wrong here, but in 2015, I purchased my first multifamily property, 34 units. And, we were looking for a way to create cash flow and generational wealth. And it's definitely been great. And it's been wonderful. And, one of the things that I constantly was thinking is, how can I make my money? How can we make our money work for us? And here are the reasons why I invested in multifamily. And I hope that it inspires you guys really to do the same thing. Number one was cash flow. I was looking for a way to create cash flow. And just pretty basic, when we look at cash flow is your rental income minus all of your expenses equals your cash flow, okay? Number two, I was looking for a way to have someone else pay down my loan. And what better way than to have the tenants pay for this loan? Number three, I was looking for appreciation, right? A property, I was looking to just invest in something that I knew maybe right now it wasn't gonna be what I wanted it to be, but my cash flow would subside, right, for the time being, and I'm banking on that in the long run, my property is gonna appreciate in value. And then, of course, the other two were tax benefits. One was depreciation, which you could expense a portion of the physical structure each year on your taxes, and then the 1031 exchange, which allows you to defer that capital gain taxes with no limit. I mean, you can roll that over as many times as you find properties or investment opportunities. So just, I mean, really, really, really exciting value add multifamily is what I was able to find. We purchased property for $850,000. I put $350 down payment, and I asked the seller if he'd be willing to carry a note for 2 years on the remaining balance, which was $500,000. So I want to break this down because I know some of you may not understand what maybe carrying a note is. And really, it was just asking the seller if he would be the bank, because I didn't have the full $850 to pay him cash, nor was I maybe in a position to go out and qualify with a lender, a commercial lender, to purchase this property. And it didn't say anywhere that the seller would be willing to carry. I mean, it was just through my experience of being in business and representing clients. I thought, you know what, what's the worst that can happen? Let me ask the seller. And the beauty here is that the seller was a real estate agent. I was the buyer. I was a real estate agent. We represented each other. Like there was no agent in between us. It was just us two doing the negotiations. And they were very interested in financing the additional balance because they weren't running the building, the multifamily property properly. So he wasn't making money. Being the lender for 2 years allowed him to make some money there. And it gave me the opportunity to go in there, remodel and update the units and increase those rents. So this process took us 2 years. We really went in there and we did it in groups of maybe 4 to 5 or 6 units. We would, just give notice as they vacated. We'd start working on those units, remodeling them, increase rents. And you know what? In exactly 2 years, we were able to refinance that property. The appraisal came in at 1.6, and we pulled out $1 million loan on it, got all of our initial investment and our down payment. We got all our money back, and we have zero money invested in this property. And today's value is $2.7 million. So we did really well. You could say we hit a home run. It was definitely in the works. It took me about 5 years to prepare for this opportunity, for this moment. And all I can say is that there are still opportunities out there. You just have to, go out and connect with more people, talk to other investors, other people that are just agents. I mean, you just got to connect with people that are doing what you think you want to do. So here is the one of the buildings of my property. It's 24 units, 1 bedroom, 1 bath, and I am in our property is located in Grand Prairie, Texas. And this is the front building. There's 10 units here, 2 bedrooms, 1.5 bathrooms, and they're townhome style, so they each have a little patio in the back. So all of this, we went in and honestly, we put in a lot of work in remodeling it because it was pretty bad. Property was not taken care of, roach infested. They were dealing drugs there. I mean, it was very dirty, very, very dirty. So one of the things that I wanted to discuss today was due diligence. I think that this is really important when you guys are going to look at purchasing a property. It's important that you do a thorough due diligence. And any experienced investor is going to tell you how significant and how important it is to conduct that due diligence on your multifamily property. And honestly, it's not only multifamily, but I think it's just any property. So your due diligence is when really you are analyzing and taking full inventory of this property, okay, before you are entering into an agreement. And I can't stress, and I can only tell you guys this from my mistakes. I mean, there have been times where we've learned the hard way, right? We've learned through mistakes and through a lot of, and really the biggest mistake is the expensive mistakes. So very important that you guys do a thorough due diligence when purchasing multifamily. Now there's 3 types of due diligence in the multifamily world, okay? Financial due diligence, your physical due diligence, and your legal due diligence. Has anyone on this call been in any part of due diligence for a property that you guys have maybe thought of purchasing or were inquiring about? Financial due diligence. Has anyone been in the financial due diligence process? Okay, no one on this call? Okay. All right. How about physical or legal? Any of these due diligence? Okay.
Well, financial and physical.
Okay, fantastic. Very good. How are you, William?
Funny, I was going to be quiet today.
No, you're always welcome. Your questions are great. All right, so as a rule of thumb, we are going to always perform the financial due diligence first. We want to make sure that the numbers make sense and that everything's going to work out for you before you start spending any kind of money on inspections or any kind of legal work, okay? And I want you guys to know that the majority of deals that don't close are really due to the financial due diligence. Financial is going to be your first step. Once you look at the numbers, if those numbers make sense, then you are willing to go into that next step, right? Money to send out to, let's say, an inspector, a roof inspector, because each one of these inspections is going to cost you a lot of money. So before going to that next step, you want to make sure financially you're good. You feel like, hey, this property works for me. The numbers make sense. I'm gonna continue. So you have usually there's a 30-day due diligence period for inspecting smaller properties. Larger properties, you probably want to do 45 to 60 days. Okay. My 34 units, I did about 45 to 60 days. This was my first property. There was a lot of stuff that I had to go through myself, and I wanted to make sure that I had enough time to do it. I didn't want to violate any of my like just the period. I just want to make sure that I was in line with my contract and everything that I needed to do. Now, the due diligence period should not begin until you've really requested all the financial documents. And I'm going to tell you why. Because you want to make sure that you motivate the seller and you make sure that that seller has given you everything that you need from the financial part so that you can do your due diligence before you open escrow and you think that while you're in escrow, you're going to get additional stuff. You'll get it, but it takes time. Sometimes they get so busy, they're not as organized as they should be, and a lot of times you will find that they're not as organized, and so it takes time, and you don't want that delaying or taking away from your actual due diligence period, right? You don't want to lose days waiting on financial stuff. You want to use these days to actually go in there and do physical inspections. Make sense? Okay, so here's a step-by-step in analyzing your property, all right, for your due diligence. So you want to verify verify the income. We want to verify all the expenses. Very important. You're going to calculate your net operating income. And if the property meets this criteria that you're looking for, then you go ahead and you guys continue, right, with your letter of intent. You begin you begin the process. You're going to start now. You're going to write your letter. You're going to submit the letter. You're going to agree on a price. Everybody agrees with that letter of intent, right? And then they're going to come back. Maybe they're going to counter some stuff. Whatever it is, that's your moment to pretty much put things in that letter of intent.
Quick question.
Yeah.
So I've looked at a number of properties, and when I started asking for things like copies of leases and stuff like that, I started to get lots of pushback. I basically assume that they're, full of what at that point. Because if they can't provide the actual, documentation, then what's the deal? Is that a accurate approach for this, or that's normal for them to refuse to produce that, leases and stuff?
Leases come later.
Okay.
And you
What
want to
about
look
bank
at,
statements? What about bank statements showing deposits?
you probably want to look at profit and loss. You want to look at rent rolls. You want to look at trading, like a T12. You want to look at what they're using, right, to manage the money. And then you can ask for copy of leases, but that really comes, I would say that that's something that's part of your due diligence. Once you've looked at the numbers of the property, because a seller is not going to want to give you, if you call me up and say, hey, can I get a copy of all the leases? And we have nothing, we have no letter of intent, and I'm not going to give it to you. I want to make sure, right, that I'm going to give you everything that you need to do your due diligence as far as verifying numbers. And then if all those numbers make sense, then we can put together this letter of intent. And in that letter of intent, you can ask, you can say, hey, within X amount of days, I'd like to get copies of the leases, because you want to make sure that that is what they're putting on there, and that you do. I mean, that's part of the process. You'll get, gosh, and I forget the name. Bill Gross, you're on this call. There is a document. I always forget the name of that document to verify leases or rent amounts that tenants are paying.
Lease affidavits.
Estoppels.
Yeah, or lease.
Yes.
I've heard them called lease affidavits also, where each renter signs an affidavit of how much they're paying and everything.
Correct. So I mean, I'm sure there's multiple names for it, but you get that once you're in escrow, and you're verifying all of that, you can get all of that. And if you still are within your due diligence period, right, you can always come back to the seller and just kind of discuss that. Wait a minute, your rent roll says something else. This is what I have. I mean, that's part of the negotiations. But I think that once they start releasing a little bit more personal information, I mean, you really have to be in escrow. You can't just call them up and ask for all of that when you're not even really serious about purchasing this property. Make sense?
Yeah.
Okay.
So wait till you're in contract before asking for proof, and
Correct.
just rely on those numbers before that, with the understanding that on your LOI, you make it clear that you're gonna want this stuff, or it's gonna fall out of contract.
Correct. So you start with all the financials, right? Get everything that you need. That you want to verify that property is producing whatever it is they're saying is producing, right? Once you look at those numbers, once you're going into escrow, all right, so now let's verify. And then you can ask for whatever it is that you want to ask. So you guys will agree on a price, and then at that point, you will fill out a purchase agreement. And then that's when really technically your due diligence period begins. Okay, so this financial due diligence period is a financial, it's a due diligence that is outside of your actual contract due diligence. Making sure that this property makes financial sense and you will continue. All right. So now here's a list of problems that can occur while you're going through your due diligence period. There could, once you start sending out in your inspections for whatever it is, okay, and we're talking just in general, everything. Repair costs could be larger than what you thought they were, right? Maybe you didn't factor in that, or based on their numbers and based on these repairs, it just may not make sense. Probably their tenant is low and they're not collecting enough security deposits for them. Leases don't match what's on the lease schedule. So Ari, here's a great, great response to what you were concerned about, your question. Right now that you're in escrow and you ask for copies of leases or just verification of, let's just say, for example, a great example is, let's say, a chiller, right? Chillers are very expensive. Maybe the inspection comes back and it says, hey, it's, they probably need a new chiller. Well, what's that going to cost, right? Could be $30,000, $40,000, $50,000. Now you're going to take that into consideration with your, what's this property? What's the cash flow? I mean, what are you got to look at everything, right? It's not just one thing. Now we have to take into consideration that the property needs repairs. It's going to need a new chiller. Maybe it needs a new roof. I mean, it could be a bunch of stuff. And now we're going to have to go back and say, hey, I'm sorry, but I made an offer at this price, but we're going to have to take this in consideration, right? You can request for credit. So many things.
You're missing my very favorite one. It's when you start discovering things like nuisance liens on the property that you want to buy, or unknown liens. Those are always fun.
True. And you also want to make sure that you don't run out of time, right? You want to make sure that you're within those 45 or 60 days, whatever amount you negotiate, that you don't run out of time. And if you do, extensions, when you ask for extensions, sometimes they will cost you, they can cost you additional money. They're not free because multifamily is different, right? The seller is out looking for a replacement property, and if they are making offers on their properties, they need to make sure that this is going to happen, or else they can't buy that other property. So remember, because there's 1031 exchanges here involved, and so you got to make sure that everybody's on the same page. Property owner is cooperating, and you're not running out of time, and you're following through with what you need to do on your end. So now all of these problems, they can be addressed with the seller. So there's a lot of communication that needs to go between whether you're working with the seller directly or you have an agent that's working. Let's just look at these things here. So if there are if you turn up that there are some like unforeseen repairs, such as the roof, right, or foundation problems, you can go back to the seller and ask for price concession to fix that, or to just credit you that, and then you handle it on your own. Real estate investors, and this is very important in multifamily community, it's really not it's not a big community. People get to know people, and if you become an investor and you start making offers on deals, and then you're trying to get concessions, right? And they start labeling you as a retrading investor, they're not going to want to be, they're going to be unwilling to work with you. All right. So it's important that things are done properly and within reason. Okay. The only, they will do these repairs if it's really like a legitimate repair, and it's not that you're just trying to get a better price on the property. Something has to come up. You've got to have some sort of proof, right, from the inspection, whatever it is, something that really was unforeseen, like you have no idea. And like a big, let's say a foundation is huge, right? Something like that shows up. Well, now you've got a report that you can, a legitimate reason for you to go back to the seller and say, hey, listen, we've got some serious foundation problems here. We need you to help us. And if it's all done within reason, there's always a way to get through this.
Hey, I have another question.
Yeah.
Do you subscribe to the theory of get it under contract, then negotiate? I've had a number of experts say things like get it under contract, then go to inspection, then use that to negotiate and beat them up.
You know, I don't do business that way. I think that's, I'm sure, I know there's a lot of investors that do that. I personally do not. I've purchased one multifamily deal, 34 doors. I went in there. I had every intention of buying something. And I really think it's just the way I also do business. I'm pretty upfront. I want to make it happen. You know, if the numbers make sense, I want to make it happen. I try to be as fair as possible. I negotiate and we make it work. I mean, I can tell you today that the property that I bought, I mean, it was a mess. It was run down, roach infested, drugs. I mean, there were prostitution around. I mean, it was bad. And I could have gone in there and I could have beat the seller up even more, but I didn't, because I saw, you know, this was a value add property. You know, just my experience in business, I saw the opportunity. I needed that property to be mine, because I knew the minute I went in there and I started repairing it, I was going to make that money back and more. And my property today has not, I think it's probably quadrupled in value. So I think, you know, at the end of the day, you have to do your due diligence. If the financials are there and it makes sense, and you see an opportunity where, you know, if you do some upgrades or remodels and increase rents and it's going to work, you know what? I say you go for it. But I'm not a proponent. I'm not gonna tell you here, oh yeah, tie it down and then work them, you know, tire them out. And I can't advise you, because that's not my style and that's not what I would do. I'm gonna go in. If it's a good deal, I'm gonna do the best I possibly can to close the deal, because I see I see the value there. Make sense?
Yeah, no, I understand what you're saying. I was just curious if, you know, if that was part of your philosophy or not. I mean, that's all.
Okay.
Cool.
Perfect. I mean, I want the deal, right? If it makes sense, I want the deal. I'm going to work and do whatever I can, and just fair, just always be fair. So if the leases don't match the schedules, right, here's an opportunity where you can either have the owner produce those leases, adjust the income according to what the leases show. So it's all part of making sure now that we're verifying all those numbers that they have provided us with. Now we're going to confirm, right? We're going to confirm with additional documentation. If the property contains poor tenancy, then this will be reflected in the price. And more than likely, you'll see the lower rents, and you probably would make an offer at a higher price. because all of that has to make financial sense. And really, as an investor, the number one rule is you're going to buy a property on actual numbers. Ari, you and I had this conversation right before, not pro forma numbers, right? Because you're going to find that there's sellers out there, and even agents will list properties at a pro forma numbers, and it's not actual numbers. So basically, the seller wants to take, they want to take a profit on something that's actually not there right now. So you always can go back to the seller and you can negotiate these discrepancies, and you can try to come to some sort of an agreement where both are in a happy place, right? And both are getting, like, the buyer is getting what they want and the seller is getting what they want. Now, if you do run out of time, you may be at risk of losing your down payment. So it's really, really important that you're working really concurrently here with the seller. And again, if it's, my situation was different because I was working directly with the seller. So if you guys have an agent, then you know that the agent will be working with the other agent as well. Also, you can ask for extensions. Yes,
You get your deposit back if they can't produce, they said this, and this, and the leases show otherwise, you're getting your deposit back. I mean, that's why you always use an escrow company and don't let the other agent hold the money.
Correct. So always when you opening escrow, yes, when you go into contract, you're opening, now not every state has escrow companies. They have attorneys, right? Title and attorneys. And you do open your escrow with the title company, and the attorney manages everything. I mean, they're handling everything for you, but you're not giving money directly to the seller. I never gave a dime to the seller. It went straight to a neutral party who, representing us both in this transaction.
Yeah, I've had agents who want to hold the money, and I kind of looked at them and I said, yeah, that's not happening.
No, that's not, I mean, why would the agent want to even hold money?
I don't know. It was the same agent who I told I was going to give him an opportunity to double dip on the deal. And he's like, oh, I won't do that. I won't double dip on a deal. So he didn't want to double dip and make more money, but then he wanted to be the escrow too. I was like, I don't think so.
Yeah, no, that doesn't make sense. Doesn't make sense. Any questions so far? Because I know this is a lot of info I'm throwing out at you guys. So
Annabelle, how do you make sure the numbers they're actually giving you are, like what they are? Are there people out there who would just put something together so they can just sell the property? Like, how do you make sure you're getting real numbers?
Well, so they're going to give you, look, they can always alter numbers, right? Numbers can always be altered. But when you look at your T12, you're looking at whatever financials they give you, you're going to have to sit down and really analyze all those numbers. When you get to for example, let's say you want to verify that the leases make sense, that if they're collecting $30,000 a month in rent, you now want to verify that with your leases. So you get proof. Once you're in escrow, you now get proof. Okay, here are the leases, and this is how much each tenant is paying, right? That's going to verify and satisfy that concern. Let's say that, they say that they've done repairs to the property, or there have been some big capital expenditures to the property, maybe $50,000 or $100,000. Well, then you're going to ask them, all right, I want to see proof of all of those repairs that you did to the property. Now, once you get all of that, you go back to your sheet, right, where what they provide you with, and you can start checking things off. And really, you have to know how to analyze those financials.
Do you request a statement from the accountant, from the company's accountant? Since these are all commercial buildings, there's going to be an LLC or something involved. You get a statement from the accountant. And the other thing that I always say is, at the end of the day, fraud is illegal and will get prosecuted if it's big enough. And if you're doing a multifamily and someone defrauds you for $30,000, $40,000 on the numbers, the prosecutor is going to prosecute them. I mean, it's that simple. So, I mean, there is a jail cell hanging over these people's heads when it comes to, fraudulent numbers.
Right. Well, and again, you've got, when you're analyzing those numbers, I mean, you have to know what you're analyzing. You have to you've got to look at everything. You're not going to just look at, let's say, if they're, if the, and I'm just going to throw out a number. Let's say it says at the end of the day that you're making $50,000 a month. Well, I mean, are we looking at just that $50,000, or are we going to look at everything and we're going to see, all right, I mean, we can, when we look at one of these, oh my God, I just lost my train of thought for it. Not a T12. What was the other form?
The other form. Just call it the other form.
Well, what's the form? Oh my gosh, what's the form, guys? Help me out here. We have a T12, and then we have anybody? We have another form that we look at to analyze all the numbers. We have a T12, and we have a
Is this an internal form that you made up, or is this like a government form?
No. This is a form. This is not a government form either, but it's just a form when we're looking at multifamily. We're looking at trailing 12, right? Which is every month, the income that comes in, and then just an expense, a rent roll, and an expense form. I honestly, I can't remember the technical word, but let's just call it our expense sheet. We're going to look at the expense sheet, and you have to analyze all of this payroll income.
ਵਾਲਵ ਖਰਾਬ ਹੋਣ ਕਰਕੇ ਕਾਫੀ ਹੁਣ ਖਰਾਬ ਹੈ ਹੁਣ ਤੱਕ ਭਰਿਆ ਵੀ ਨਹੀਂ ਜਾਂਦਾ
Somebody mute their
ਚੇਂਜ ਕਰਦੇ ਨੇ ਪਰ
oh gosh, okay. All right, so just to answer your question, Sophia, you're going to make sure that you are going to verify whatever numbers they're giving you. So if there's anything in question, you verify. So for example, Ari asked, can I ask for a copy of all the leases? Well, usually they're not going to give that to you at the beginning. They're going to give you all the expense documentation for you to analyze the performance of that property. And if the performance, once you analyze that, and if the performance makes sense, and you guys agree that, hey, this looks like this is a property that I like, you now are going to prepare that letter of intent, right? Letting the seller know, hey, I'm interested in purchasing this property at this price. And you now try to agree. And if they agree to that, we now produce that purchase agreement. Once you do that and you go into escrow, you now have the ability to say to that seller, I would like proof of, I want to see the leases, I want to see the receipts for all the expenses that you are claiming on this expense report. I want to see, all the, whatever, if there's additional income, streams of income, because in multifamily, you could have laundry service, you could have parking. There's so many other ways of generating income. You now are in a position where you can ask, hey, I want proof of, once you're looking at their expense report, you can ask for proof of parking, proof of laundry service, proof of, like statements. I mean, you want to ask for everything to confirm and make sure that those numbers that they're giving you are legit. Did that answer your question, Sophia?
Yes, yes, absolutely. Thank you.
Okay.
Did I miss whether you said you would go for the a certified accountant?
I think that I really think it depends on the situation. I knew, and again, I'm relating to my particular deal. I knew the condition that it was in. It didn't matter. He didn't have anything in order. Property was not in any shape or form for me to honestly ask for a certified letter from an accountant, because it just didn't make sense. So I think it really depends on the property. And I think it depends on the numbers, right? If you're buying a, let's call it a fixture upper, right? I think that's what mine was. You're lucky if you get stuff. Just you do your due diligence as much as you can,
Right.
you gather as much as you can, and then, if it makes sense, it makes sense.
Right.
I
If you're
knew-
doing a value add, that makes sense. But if somebody's saying, here's a performing building, here's, the rent rolls, here's the leases, does it not make sense to have the
100.
accountant, let the accountant put their name on it?
100%, 100%. And we've actually, on deals that I have analyzed, that I've been interested, I've actually contacted the accountant or whoever's like doing these, expense reports, because they all have their own way of doing stuff. And I want to know, okay, what does this mean? What exactly is this? And I've actually requested that if I'm able to talk to the CPA, the accountant, bookkeeper, whoever it is that's doing the numbers for them, because they're the ones that would know and would have a much better response, right, to our question.
Can you put financials in part of your contingencies?
Absolutely. Absolutely. I mean, and it's part of your due diligence. It's your due diligence. So remember, you're going to go into, let me stop sharing my screen here, because I'm pretty much done here. So your due diligence period is your opportunity to ask for whatever documentation you need to verify and confirm that those numbers are those numbers. So you've got, 45, 60 days, whatever you agree to negotiate, whatever time period you agree, you're going to ask for whatever it is that's going to give you that confidence, and that you're buying something that makes sense. Yeah. Yes, William, good for you.
I'm sorry, yes.
Perfect. So any other questions? I mean, what are you guys experiencing out there right now? What are you seeing? What have you come across?
I've noticed that a property, I saw some of the properties are going up. Like one property, I saw it last month, but then this month it's $5,000 more, or some are $3,000 more. And basically on these properties, they're remodeling the inside, but they're not doing anything to the outside, but they're wanting more money.
What area are you in?
I'm in Louisiana.
Oh, okay. Well, you're only going up 3,000, 5,000. We're going up 30 to 50 to 100,000. That's just the market that we're in right now. It's
Okay.
Check out Florida. I had a property in Naples Park, Florida that I thought I was taking a loss on. In 2 months, it went skyrocketing, and I made $50,000 on a sale. It was crazy. I thought I was taking a loss on this property, and then I made 50K on it, and I was like, okay, I'm gonna go to contract and laugh. And while I was in contract, another realtor called me and said she would have listed it for $75,000 more than I had it listed. I was like, oh my God. So what I'm seeing out there is not the prices. I think that's less of an issue in the multifamilies that I'm seeing. They seem to be relatively stable because they're driven by rents more than property value per se. But
Right.
what I'm running into is I see a lot of things I'm interested in, but I can't seem to move fast enough and get something moving. So it's really a experience and discipline issue from my point of view. The market, what I would say is the market is moving fast though. So
It is.
if you don't get on it quickly, somebody else is going to steal your cheese before you get to it. And that's my challenge.
Yeah, you have to be ready. I mean, are you searching for property, or what's your, are you a real estate agent? Are you an investor?
I'm an investor. I used to have a license a long time ago. I'm not really planning on getting another license. Then I have, all sorts of, rules I have to follow with the state, and I don't like that. But I'm looking at all sorts of different places. I get emails. I have all sorts of leads coming in. I'll drive down the street and see something. But one of my biggest fears is putting, $40,000 of my treasure chest down and then not being able to get it financed or something. So there's a lot of fear that's holding me back, for lack of a better word.
So something that I would recommend is you definitely want to start with the finance part of it. You want to talk to the lender, get yourself it's not the same as buying residential, but you want to talk to a lender. You want them to give you a list of the things that they require in order for you to qualify for a loan, right? You want to have an idea, because if you don't have the financial part in order, you'll never be able to pull the trigger. It's just the reality. It won't happen.
And that's why I'm actually working on the syndication stuff. My plan is to put together a fund and basically have committed subscribers that once I identify the building, I can call them up and say, hey, you got the building, it meets your criteria, write a check, and I can move forward. So I'm trying to do it that way. But again, I'm still learning. I don't know what I don't know. And at the end of the day, fear paralyzes. Fear really does paralyze.
It does. And I'll tell you, what I'm sharing with you guys is truly my story. It's what we went through. I didn't know. I've been in real estate for long enough. I've flipped, I've leased, I've managed. I mean, single houses, maybe a couple 2 to 4 unit buildings as well. But I have to tell you, a lot of it was just, I kind of threw myself into this. I knew, just from my background, I knew I had spoken to a lender and I had somewhat of an idea of what they needed and what they were going to base themselves, for me to qualify for a loan. And it was not going to be that easy, but I lucked out where the seller was willing to finance and carry a note. And it made the process, I cannot stress.
Also, Dorothy, I need you to come
That
and
was
fix
so
everything you pretty much
easy.
did.
Very,
You
very
carved into the
easy.
furniture.
It was very, very easy when they agreed to finance the property for me, because it just alleviated a huge, huge stress. So, I mean, if one thing ever hurts, to try to ask the seller if they'd be willing to finance, and you know what, and be generous, because if it works out, you win in the end, right? Like, you've got to pay a little bit more, a little bit higher interest rate for maybe the next 2 years, and that gives you the opportunity to fix the property, increase the rents, and make sure that the property really qualifies, then we're talking, you're in a very good position.
Or better
So
yet,
when
buy
you-
it subject to.
Or what?
Better yet, buy it subject to.
Or exactly.
So from the seller, when you took the note from him, the interest rate was actually, I mean, the terms were actually higher than what you would have gotten if you went on.
Yeah, I want to say that we probably paid oh gosh, I think interest rates at that time were somewhere around, I think we paid him maybe 5% interest rate. No more than 5%, and interest only for 2 years. I mean, it's really not a bad deal. It would have been a lot harder for me to go through the whole process and apply for a loan based on the performance of the property. Because remember, multifamily, they lend you based on the performance. So,
Got you.
yeah. So this was informative. Next week, I have a guest speaker. She is from Texas. She's from Dallas area. She's going to talk to us about syndication. She is heavy in syndicating out in Dallas. That's where she lives and that's where she likes to invest. And I thought it would be great to invite her to come speak to everyone and share what she's doing and how things are. I mean, she's doing very well. And, maybe it's something that you guys might be interested in checking out. So next Wednesday, same time, 2 p.m. Pacific time. We're here again. I'll see you guys next Wednesday. If you guys have any questions, you can definitely email me, connect with me. If you guys need anything from me or if I can help you guys in any way, please do not hesitate to reach out to me. All right. So I will see you guys next week. Thank you again for joining me today and have a great rest of the day. Take care.
Have a good one.
All right,
Take
you
care.
All right,
too.
have a
Thank
good
you.
one, everyone. Take care.
Thank you.
All right.
Thank you.
You're welcome. Bye.